Welcome back to Power of Money. Today's episode, we're going to do something a little bit different. Normally, we talk about Bitcoin, but right now we're in a chop consolidation. That means we're chopping sideways, consolidating some buying pressure before we shoot up to the sky again. We're going to float around 100K for a while here, at least I think for the next week. Don't see any catalysts along the way that are that surprising that could shake that up. We got CPI numbers this week. We got a couple other numbers this week, and it pushed the price maybe 2-3% here or there, but it didn't push it to a new level of consolidation. So we are consolidating firmly around the $100,000 number. Now, you did see a couple wicks down in the price to 91,000, and then most recently to 94,000. You also saw that those wicks down, those moves down in price, were bought up very quickly. We didn't spend a lot of time below $95,000 this week. So again, it just means that there is not a lot of supply and there are growing amounts of buyers. This morning, we just found out that Texas is introducing a strategic Bitcoin reserve bill through the House and in the state legislature. And then we also know that there are a couple other states that are doing the same thing. If you think about it from a relative basis, Texas and California are bigger than most countries' entire GDPs. So you're talking about a very, very large economy with a huge buying force deciding to put Bitcoin on their balance sheet. So literally the state of Texas will own Bitcoin and help to balance their own budget. That's just the first snowball. I mean, that's just the first domino, rather. I love metaphors. I'm over here mixing them. That's just the first domino. Maybe it's not even the first, but it's a domino of many to come, and it's going to continue to create to allow Bitcoin to become a global asset of capital that will mature at a very, very, very large scale. We know this, we've seen it, and it's going to continue to happen. So today, actually, this video is built more for the people that are still on the fence, people that still sort of think to themselves, maybe I don't need Bitcoin, I'm doing pretty well for myself. They are also potentially, they have a little Bitcoin, but they're not totally bought in. Maybe they're just investors. I'll sell at the top of the cycle. I'm thinking down the line. For those types of people, what we're going to do today is going to be a very important exercise. So I'm going to be debunking an 8-minute rant that occurred on MSNBC not too long ago. This is Chris Hayes on a show called All In with Chris Hayes. And he basically does a rant on what he believes is a mistake for the United States investing in Bitcoin and creating a Bitcoin strategic reserve. I disagree with us on this topic, and we will see why as we get to the overall video. So I'm just going to play a couple of snippets here. I'm not going to do too much. I don't want to get copyrighted and have this bad boy get taken down at some point. And B, I don't want the video to get taken down. So let's start at the top because I think it's really important that all of it gets debunked or at least addressed.
A dozen billionaires and super rich people as Axios.
So we are running a little bit slow. I'm going to move this bad boy down to.
Axios puts it, the president-elect has assembled an administration of unprecedented, mind-boggling wealth. Now, let's be clear here, right? The U.S. is a place where moneyed interests have.
So specifically, he's talking about the fact that Donald Trump, he is putting in place in his cabinet, among other people, a number of people that are already extremely wealthy. Kennedy's, Musk, Vivek Ramaswamy is a tech CEO. He sold a few companies, I believe, and has made quite a lot of money off of it. You name it. All the people that are coming in with Donald Trump are extremely wealthy. You would think this is the case because Donald Trump himself is very wealthy, and so he's going to put in place the people around him that make the most sense in terms of his similar socioeconomic circle. He learned this lesson from the last one when he basically said, I'm going to play the political game and grab everybody and give some chips here and chips there. He's like, I only got one term left in me, so I'm going to do what I want. And what he wants is to put people around him that think like him from a wealth scale. Now, there's other ideologies that I do and don't agree with, up and down, but that's we want to focus on Bitcoin in this particular sense, not in terms of what I disagree with from a Republican Party or a Democratic Party. And I think that's the biggest thing I want to take away from this, is that unfortunately, MSNBC has done this twice now. They have decided to place crypto and Bitcoin and new technologies firmly in the hands of Republicans as a us versus them topic. And they don't realize that this is an extremely American ideal that Bitcoin has introduced into the monetary system, but it's also something that's just like, it's apolitical. It shouldn't be this black versus white, us versus them, your team loses, my team wins mentality when you're talking about solving an economic problem that every single American faces, which is that their currency gets debased regularly, and the dollar bill that they use to exchange value in the world does not retain its value over time. Period, point blank. Unfortunately, he hasn't done the work. We talk about doing the work. Chris Hayes, and it seems like the people who are writing a lot of these rants have not done the work. And so we'll see why this is an issue going forward.
Have had incredible leverage and influence for a very long time. In fact, it's been a huge gaping wound in American democracy. But this is different and worse, I think, the worst it's ever been. I mean, Trump has brought in huge amounts of money from a very small amount of people, unprecedented.
So specifically, he's talking about the fact that he admits that America runs as a de facto oligarchy, meaning rich people run the nation. But then he sort of dismisses it and says, oh, we've always been like this, but Trump's doing it on a whole nother level. And whether he is or he isn't, I don't think is the question we're trying to answer today. I think actually the point that he's missing is that the country's always run this way. It's not better or worse. What's different is that it was subtle and behind closed doors now, and now it's wide open. And actually, transparency is better for everything, whether it's good or bad. If we're transparent about why it's good or bad, if we're transparent about the problem, if we can see the problem clearly, if we want to define it as a problem, then we can do something about it. But when it's in the dark and it's behind closed doors and there's deals made and all of these things happen and you don't know who the person is that's controlling everything, that's even worse. That's more insidious.
Including the richest man in the world, Elon Musk, who spent $250 million helping to elect Trump.
I'm going to fast forward us here because
and those rich benefit
Bitcoin stuff
in return.
So he's basically
including
saying
this country's
that,
social safety net.
The rich people,
except presumably the billions of dollars in federal
return.
contracts that Musk's companies get. Now, when people talk about oligarchy in this country, ruled by the wealthiest people, political influence than the rest of us. They manage the agenda on Capitol Hill. But oligarchy under Donald Trump is starting to look much more literal. The billionaires are being given direct access in public, or are they going to use it to benefit themselves?
You just didn't see it.
To that end, Donald Trump just announced he'll.
So he's talking about all the people Donald Trump is putting in place, and he
familiar.
finally brings it home to the fact that
very rich right wing.
It was the largest lobbying industry across the board. This wasn't just Bitcoin, and it also wasn't just Republicans that they spent money on, but they spent upwards of like $250 billion to help put in place pro-crypto candidates. They filled the House on the federal level. They filled the Senate. There's a couple of Senate races that were financed in order to flip them so that a pro-crypto individual would be placed into office. And of course, Donald Trump went to the Bitcoin conference down in Nashville, Tennessee, and explicitly said, "I'm a Bitcoin advocate. I own Bitcoin." Da 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 da. So, what he's saying right here is that, oh, how could they spend so much money trying to get their agenda across the line when the entire American political system is built around lobbyists for particular industries? There's always been a rich person who changes something about the government to get their way. Now, I'm not saying this is good or bad. What I'm saying is that it's always been done. And to try and pretend that crypto is so much worse, Bitcoin is so much worse because they were successful in doing it this cycle, that is where we start turning our heads to the real problem and turning it to trying to find a villain for why this particular election cycle went so bad. And the truth is, it did go bad because you're still misunderstanding exactly what this industry does and why it exists and what it can do for the
South
nation.
African guys, Peter Thiel and Elon Musk. In fact, back in the 90s, Sachs actually co-wrote a book with Thiel about how Trump hosting a per person. With the anticipation they will face a far more friendly regulatory environment under Trump. In fact, just yesterday, the value of Bitcoin, a single one, hit $100,000 for the first time. Crypto interests were one of the biggest spenders in this election cycle. They dropped a ton of money for Trump and against crypto skeptical Democrats, including in primaries, or in this Senate election in Ohio, where they dropped $40 million to oust the crypto skeptic Senator Sherrod Brown of Ohio. And to be clear,
again, they dropped it because they were interested in having their interest pushed. That's how the American political system works. You put in place, you vote in, you try to get elected someone who does what you want them to do. Because the crypto industry did it very successfully, they are now the villain.
Scams, fraud.
This piece is
cryptocurrency,
important,
particularly as a financial instrument integrated in good reason. I think crypto is interesting. I know a lot of people who own crypto, but there are also perfectly good reasons to be skeptical of cryptocurrency, particularly as a financial instrument integrated into the American financial system.
So this is where the work, again, has not been done. The first piece is, yes, there are a lot of scams in crypto. A ton. There's a ton of scams. There are a ton of rug pulls. There are a ton of ways you can lose money. It is not like the Garden of Eden. It's not a pretty place. Now, what crypto needs is actual regulation, but not necessarily antithetical regulation where everything in crypto is negative. What we don't understand is that the companies that are building themselves in the cryptocurrency spaces, that use cryptocurrency rails, that adopt cryptocurrency ideologies and technologies, these companies are the new Microsoft. They're the new Meta. They're the new Facebooks. They're the new Alphabets. They're the new Amazons of the world. And so if we just completely ignore them and call all these companies spending years and years and tons of intellectual capital building the new technology that will make things, brand new things, be able to be created in the future, then we're literally saying no to the future. And instead of just deeming the entire space as this cesspool of whatever it is, you got to look at it honestly, see, and shift out the good from the bad. But unfortunately, because it's a good, meaty bone to chew on from a political us versus them scenario, crypto is the baby getting thrown out with the bathwater. Now, one thing I really dislike about this is this constant connection between crypto and Bitcoin. And it's not that they're not connected, but if you don't understand why Bitcoin is the beast, the best, and can never be forgotten, then you don't understand the entire space, because it all came from there. It's the mothership of all cryptocurrency, right? It's the first blockchain to ever be created. It is the first cryptocurrency where a store used as a store of value. It pioneered proof of work, which then turned into proof of stake. Like Ethereum could not be Ethereum without Bitcoin being Bitcoin. They literally built themselves as an antithesis in certain areas to what Bitcoin provided. And the same thing happened in other spaces. So because you don't understand the industry doesn't mean real value isn't being built there.
Not the least of being disasters, blowups. Cryptocurrency democratic regulators have worked hard to keep crypto, which has been supremely volatile, blocked off from the rest of financial systems, so that if it crashes, it doesn't bring the entire U.S. economy down with it, requiring a bailout.
Here's the piece that's extremely important. It shows how backwards minded this is. He's worried that $1 trillion, it's the crypto industry, I think, is between $2 and $3 trillion total. Half of that is Bitcoin. The rest of it is everything else. Give or take 10, 15, 20%, whatever the case is on the allocation side. But he's basically saying that this small piece of money running around in itself, this $2 trillion is somehow going to crash the other $900 trillion of value that exists on the global economic scale. And then you want to pretend like the industry gets bailouts, because bailouts are horrible, and we know bailouts are horrible. But what's crazy is, how can you say this industry is going to get a bailout when it is the freest market we have ever seen as a human race? And it's the most freest because it's the fastest, and there's the least amount of regulations. Now, there's pros and cons to that, and that's why regulation is necessary in terms of being able to stop people from creating the grift, stop people from rugging people, creating a coin and taking all their money out, all that types of stuff. But to say that all of a sudden this $2 trillion industry, if it's integrated properly, it's going to crash the entire other system. If you're saying that and you really believe it, it's because the entire other system must be built on glass. It must mean that any card pulled out of that deck and the whole thing falls.
Some rich people holding a lot of crypto disagree with that strategy.
This part pisses me off, because again, it goes back to his original premise that it's rich versus poor, that it is rich is good, middle class is bad, and let's all try to help the poor. That's basically the ethos. But I have a hard time agreeing with that. There's an intellectual incongruence that occurs for me, because I want to be rich. And when I'm rich, I'm going to want to keep as much money as possible. But unfortunately, I have to then look at rich people like they're bad because they did really well. Now, I'm not talking about being a rich person that keeps all my money and is like whatever to the rest of the world and to the plight of people in need. I want to be a rich person that I can give my money to my family and causes that I believe in. And I think most people fall in that bucket. And if you're so successful and you provide so much value to the world, why should you take advantage of the growth and the value, the exponential value you've created in the world? That's capitalism, right? That's why people love America, because anybody can create anything and grow it to astronomical scale. So this like idea that, oh, rich people are suddenly going to they want cryptocurrency in the market so they can get richer. Here's the important piece, and I want to separate cryptocurrency, the broader cryptocurrency industry, from Bitcoin at this point, because it's really important for people to understand how Bitcoin was created. Bitcoin was first created by cypherpunks, by the geekiest, the nerdiest, the smartest, the most educated, the if you want to call it savants of the world. They were lab gurus, they were software developers, they were stuck in a lab in some room somewhere writing code. Bitcoin was created by a coder, a mathematician who understand monetary networks and created one in digital form. So this network was then given to the public. Everybody in the public. It wasn't just given to rich people. It wasn't just given to the middle class, and it wasn't just given to those who barely get by. It was given to everybody. Now, unfortunately, to accept it, to take that, to understand it, and put value into it so that you could extract value from the network, you had to understand a few things. First, you had to understand how money works. Second, you had to understand why the system was valuable, and you had to understand its future potential. Most people didn't have 1, 2, or 3 of these points. Most people didn't know how to run a mining operation on their laptop, even though most people now, if they could, they would have figured it out, and they would have mined thousands of Bitcoin, and they would have sat on it. Most people didn't keep their coins for long periods of time. I see consistently there are people who have hodled from like $50 Bitcoin. Their wallets haven't been touched. The Bitcoin has sat in that wallet and has not moved for 10, 12 years. And now it's moving. That means they held that Bitcoin for 10, 12 years, watching it go all the way to $100,000. That is conviction that most people don't have. It is not a rich thing. It is not a poor thing. It is not a middle class thing. It's an intellectual understanding and then a mental fortitude to deal with the ups and downs of a nascent industry. Yes, it's volatile. It's volatile because it's trying to figure out how valuable it is. And the thing, if you zoom out, you'll see that it's volatile on the upscale. It's up and then down, and then up, and then down, and then up, and then down, and then up. And it just continues to go up because it's growing into the size it's supposed to be. It is an asset that is meant to be worth trillions of dollars, and it's only worth 3 right now. Bitcoin itself should be worth probably $100 trillion. All other cryptocurrencies as well will probably be worth around $50 trillion, or at least the size of, I don't know, a third of the equities market. I got to check the graph. I think the equities consist of maybe $300 trillion. You know, if you think about what the other side of the cryptocurrency market it is outside of Bitcoin, these are just private companies with an investable, tradable asset that gives you upside as they grow. So it is a fancy new way to invest in a company as if you're a venture capitalist. That's the basics of what most tokens are that are valuable. Other tokens are just trading cards. You give them back to each other. They go up in value based off demand. And then other tokens are straight up Ponzi schemes where you're giving your money to pay back somebody else and then they rug you. So it just depends on the company. Right? Apple's stock is valuable because Apple is valuable. So not every cryptocurrency is an Apple. Not every crypto company is Apple. And not every crypto company is AOL. Some are going to go the way of the dodo. Some are going to rise to the challenge and become the new technology of the new age. And if you aren't doing your research, you're going to be like, oh, wait, I should still invest in GE stock and Intel chips, right? Like you need to be in NVIDIA and Ethereum, right? Like these things are the next 50 years of growth will be in these sectors. So why am I going to cut my nose off to spite my face to say all cryptocurrency is bad? It's going to ruin the market. No, the market's ruining itself because it's greedy. The free market doesn't allow for people to be bailed out. Banks are bailed out all the time. Silicon Valley Bank went up, belly up in a matter of a couple of days. And guess who bought them? Another bank with financing from the federal government, from the Federal Reserve, right? So you're talking about bailouts as if they don't happen in the system. You're worried about being tainted by the blood of cryptocurrency and Bitcoin. Bitcoin is completely different because it's not a company. When we're going to do a whole video on like and do a deep dive of what Bitcoin is, the entire industrial complex and the entire foundational protocol layer. But right now, let's get back to this debunking of this ridiculous rant.
They want a bailout, implicit or explicit, if the House of Cards comes crashing down. To that end, after Republicans took back the Senate with the help of money from the crypto industry, they now have a plan to return the favor. And I want you to listen to this part because no one's really talking about this, but the elements of the plot are just there in plain sight. Senate Republicans are working on a bill that would transfer billions and billions of dollars of money from the U.S.
Okay, so he's talking about the Bitcoin Strategic Reserve. And in his mind, because the United States, so let's cause and effect it. His cause and effect are the United States buys Bitcoin for its strategic reserve. Effect, rich people get rich. The jump is ridiculous. We just talked about how when Bitcoin first came out, the people who got rich were poor beforehand or middle class. They were not the wealthiest of wealthy. They were just smart enough to look at it and figure out this might be valuable. That's why there are so many diehards in regards to Bitcoin, because so many people got rich off of it. And they got rich because it was a nascent technology that was maturing in its market size. Uber grew like 25,000%. I don't know what the number is. That's definitely made up. Don't quote me on that. But it grew gangbusters from a market share perspective when it first hit, when it had product market fit. People realized this was a great idea and everybody used it. Nobody's pissed because it was volatile and it grew very, very fast. That's what's happening with Bitcoin. It has product market fit and people are adopting it for their own reasons because it makes sense. Now, he's saying specifically that if United States buys Bitcoin, the people who would benefit are rich people. And that's the argument. That's the argument. But he doesn't understand that Bitcoin is for everybody. It's freedom money. It's literally built so that you can use your money for what you want to. And that has pros and cons. But what it doesn't do is say that just because you already have money, you're not allowed to invest in this asset and see your net worth go up with it. Here's the biggest difference between his understanding of money and hopefully yours and definitely my understanding of money is that Bitcoin is an asset anybody and everybody has access to. But if you're rich, you have access to amazing art because you can't cut a Picasso painting in little bitsy pieces and sell it that way. We'll talk about how they're trying to do it, put it on blockchain. You can't really invest in serious Manhattan real estate. It's very difficult to start getting up the board in a real estate investment. Like you got to really grease that wheel before it starts to make sense because every single deal requires money up front just to get the ball rolling, 20% down, 10% down, 5% down, whatever the case is. You cannot start a business and get to millions of dollars in revenue that you can take out without spending your blood, sweat, and tears, finding investors, finding product market fit, getting your marketing situated. All of that is work required just to get the asset you're investing in delivering positive cash flow or at least equity on your investment, return on your investment. But anybody who invests in Bitcoin, if they invest in Bitcoin right now, gets the exact same return on their investment from today to the time the United States invests in a national strategic reserve. If Bitcoin goes up 40% and I own $100 of it and this rich person owns $100 million of it, we both increase our net worth by 40% or our investment by 40%. It's equal to everybody. And that is the piece that people miss. They think that, oh, you're only allowed to have some because you're rich and you can afford it. You can buy $1 worth of Bitcoin today. And that dollar will go to $1.40 if the Bitcoin Strategic Reserve is enacted. Everybody gets 40%. That's the difference. And that's what he doesn't understand because he's still looking at it in this sort of, these assets are only for rich people. He's got a broke mindset. He's got an old school mindset. He doesn't understand that this was literally invented to avoid this asset restriction that has already occurred in the entire global economy. Rich people have access to the highest performing assets because they have liquidity and they have capital. Bitcoin is the freest, most liquid capital on the planet, and it gives everybody upside if you decide to place your value in the system. That's it. That's it.
US government from taxpayers and hand it over to a handful of big crypto holders.
We got a president.
Just Senator Loomis was talking about the Bitcoin Strategic Reserve Bill.
One of the most audacious schemes I've ever seen in Congress. Here's why. Rich folks who own a lot of crypto have a problem, right? Cryptocurrency, Bitcoin in particular, is a very valuable asset. Single Bitcoin worth over 100 grand. Some very, very wealthy people own hundreds of millions or even billions of dollars worth of Bitcoin. David Sachs, for instance, has a lot of crypto. That said, it's not a liquid asset like cash that you can easily spend or invest or use for practical purposes. It has no practical use really outside of a few gimmicks, and it's very useful for criminal cartels.
I know you can see the fallacy in this statement. First of which, it's far more liquid than cash because you can move it anywhere on the planet at the speed of light, period. You can spend it anywhere because you can convert it to dollars or whatever currency you have very easily. Um, Secondly, to believe that if the United States invest in Bitcoin, that means they're handing cash over to like 3 people. No, actually, they're handing cash over to absolutely everybody who invests in Bitcoin. But they're not handing cash to them. They're handing value to the system, which increases the value of the system because the demand goes up and the supply does not. So not only are they storing their value there, but everybody in the system, not just rich people. China gonna get some wins. Russia gonna get some wins. Bhutan's gonna get some wins. Ethiopia mines it. El Salvador mines it. I own it. You own it. Jim from down the street own it. Most millennials, 60% of millennials own, and under are crypto holders. Bitcoin specifically. There's a large number of younger individuals that are crypto holders. I would assume that most of them also own Bitcoin. I don't have those stats in my head for real. But at the end of the day, to not understand that it's like saying, oh, if I buy an Apple stock, then only the CEO and the CIO and the entire executive branch are the ones that are going to see an upside in the price of that share. Like, to ignore every single other shareholder just to make a point is just absolute horrible logic. So to look at every other person on the planet, and I do mean the planet because we got to move outside of this like American centered focused view of how things work. It's just, we are not alone on the planet. And rich people are not the only ones that own Bitcoin. Like if Bitcoin were to go up in price, many Americans would see an increase in their bottom line. They would spend more, they would do more, they feel more secure, and the economy would get better. If we decided to sell it later down the line, you could balance the deficit. Like it mind boggles me how someone could write this and not even remotely do any research on where Bitcoin came from, why it exists, how it operates right now, and what's happening. The funny thing is it's way back in the day, or way back in the video, he talked about integrating Bitcoin into traditional, or integrating cryptocurrency into traditional financial space. And I'm like, bruh, that happened in January. They created a Bitcoin ETF. And then not too soon after that, they created an Ethereum ETF, and they're going to create a Solana one and an XRP and a ton of other ones. And there are indexes that track entire portfolios of cryptocurrency right now. Bitwise has 2 indexes that track regular cryptocurrency companies and then actual cryptocurrency companies. So like regular adjacent to cryptocurrency companies could be like Bitcoin mining companies, MicroStrategy, because they issue bonds based off of Bitcoin, all of these other types of companies. And then they invest in companies like Solana and Ethereum and XRP and all the top 10 coins. But to believe that the system's not already integrated is another fallacy, is another, I'm just going to put my head in the sand and scream at the top of my lungs about nothing.
So if you're an investor, you're sitting on this speculative asset. You can't actually do anything with it, but it's worth a lot of money. What's more, if you try to sell it all off, right, to get rid of it, the hordes of Bitcoin on the exchanges, that's going to flood the market and tank the price.
So one, there's not a lot of Bitcoin on exchanges. That's why the price keeps going up, even though people want the price to go down. There's just not a lot to sell. Period, point blank. There's only 1.5 million or so left to be made in existence. There's already 19 million out there, and most of those are sold. 2, there is no individual on the planet that can shake the price of Bitcoin more than 1 or 2% for more than 1 or 2 hours. Now, are there coordinated efforts between exchanges and trading houses and custody firms and hedge funds in order to shake the price of Bitcoin? Yes, But those are not individuals, and they have lots of capital, and they can borrow against lots of capital, and they can hedge their bets on the opposite side of the market. They can do a lot of things at a much higher scale than we can, so they can shake the price of Bitcoin. That happens in the financial space already. It happens in every stock market, in every stock market in every nation. It happens in every industry. It is something that already happens. That's part of the financialization of an asset. You give people the opportunity to leverage against it, bet against it, speculate against it, trade against it, invest against it, do all the things so that people can create value on top of that base layer.
So what's the solution? They're going to sell it to the U.S. government.
Over 5 years, the United States.
Who is they? Who is they that's selling it to the American government? Do you not understand that BlackRock and 7, 8, 9, 10 other companies own 1.1 million Bitcoin? They are all American companies. They are all under the ETF equities bucket of the global sphere of value. That $900 trillion is big, $300 trillion in equities. Inside that bucket is a ton of Bitcoin holdings. MicroStrategy owns a ton of Bitcoin. They have 400,000 Bitcoin. So the United States, whether tangentially, indirectly, one of the entities as a subsidiary, the United States is already in control of 1.6 million Bitcoin. So the United States itself buying another million, it's not something to be like surprised about. You're just taking an indirect ownership and changing it to a direct ownership. And then we have 2.5 million Bitcoin out there. And I get it. People are not in the weeds like I am. People are not in the weeds understanding what's going on behind the scenes like I am. But that 1.1 million Bitcoin that was purchased in the last 11 months. The ETFs have only been around since January, and every single one of those Bitcoin were bought and are in the money right now. Every single one of them is in the money right now. Because Bitcoin's hitting an all-time high. Yes, flow, people sell and they see it, they sell and they buy and they sell and they buy and they sell and they buy. But on a net, they buy way more than they sell. So these are people with their 401ks, with their IRAs. The average transaction size for the purchases inside these ETFs is $15,000. That's not your average rich person. I follow somebody online and he'll tell his stockbroker to make $500,000 $1 million trades. Like, 15,000 is not a rich person making trades. These are everyday people saying, you know what? I got like $4,000 in an IRA and I want to put half of it in Bitcoin. Like these are everyday people. And so you're telling me that the everyday person who invests their time and energy, places it in the stock market so they can see the value grows up, believes Bitcoin is an asset that will help them do that, invest in Bitcoin, and now they're the evil rich person that shouldn't get appreciation on their dollars? Like that shit. Excuse me. That is stupid. It's dumb, Chris Hayes. Do better.
Well, 20.
Sounds like she's just reading.
Yes. Are you tracking what's being planned and announced in person here, right? The U.S. government handing billions of dollars into the pockets of rich crypto holders? The plan is that the Bitcoin Act would have the government sell off some of its gold reserves, you know, the stuff from Fort Knox, and use the money to buy 1 billion Bitcoin. At current market value, that would cost $100 billion.
I'm going to stop here because let's stop pretending that $100 billion is a lot of money. It's not. We've been sending $100 billion like what, quarterly to Ukraine. We send $100 billion worth of weapons to Israel. We've sent more money than that to Iran, to people we don't even like. Like it's not a lot of money. Like let's get over ourselves over how much money it costs. It doesn't cost a lot of money. Like it's not that big a deal.
Now, the actual price would likely be much higher because that market value would almost certainly rise as a result when a new buyer enters the market and boosts the price of the asset the buyer is now legally obligated to buy. This is an enormous heist. They're just backing the truck up to the government in front of all of us. A massive bailout to the crypto world. The opportunity to turn a speculative asset into real cash on your dime. And presumably David Sachs is...
First of which, not on the American dime, because the American dime doesn't run on a gold standard. We don't have access to that gold or the value of it at all. At all. Secondly, it's not like they're taxing people for it, so it's not coming out of my pocketbook. And third, I get why people who don't have a lot of, skin in the game on this, don't have a knowledge of space, are convinced by this logic and this fallacy, because without any understanding, he's given a very performant exposition on why the Bitcoin Strategic Reserve is bad. What makes no sense to me is that MSNBC, CNBC, and NBC are all basically the same damn company. How the hell do you have Larry Fink How do you have Larry Fink and many others on CNBC convincing the world that Bitcoin is an absolutely required asset, should be at least 2% of everybody's portfolio, and then MSNBC later that night says Bitcoin is a scam and rich people are trying to steal your money by getting the United States to invest in it? That doesn't make sense to me. Where is the gap in understanding to where the business shows, the ones that talk about my money, the ones that talk about the world, the global economy, the ones that help me understand what's going to happen on the next quarter, the quarter after that, what's happening with companies, what's happening with my wealth as it's invested in assets, is telling me Bitcoin's a good thing. And then I should invest in it. And not only should I invest in it, but I should go do my research, understand it, and then invest in it, and then help somebody else invest in it. And then on MSNBC, because it's something, a football that can be thrown around, Bitcoin's now like this ghost that we should all be scared of. I'm mind-boggled about that one and very frustrated.
As the crypto czar will help usher that plan through. And there is a real irony here. For a long time, as long as I've been covering crypto, which is over a decade, advocates have sold crypto as this libertarian project, right? We don't need government. We don't need banks. We don't need financial intermediaries. We don't need regulation. Here's Sachs himself making that point on a podcast 2 years ago. At the window, though, when Republicans decide they want the government to initiate a massive upward transfer of wealth and bail out the crypto industry.
The fact that he's back to calling it a bailout of the crypto industry means he also isn't a student of history, or at least not modern history, because Silicon Valley Bank bailed out. Sam Bankman-Fried went to jail. Sam Bankman-Fried was the CEO and founder of FTX, the famous collapse where they were basically playing with a bunch of people's money.
Excellent own goals.
And they did not have all of the funds that they said they had, and they were just leveraging it out, betting in all types of places. So when the market fell through, everything they had fell through. The funny thing is, the same thing happened to Silicon Valley Bank. Silicon Valley Bank was like, damn, these interest rates are high. These bonds are getting me crazy returns. I'm just going to invest in a bunch of treasury bonds. Vice versa. Interest rates were low and they were buying into treasury bonds. Now interest rates go up, value of the bonds go down. Their balance basically was out of whack, and they didn't have enough money to cover their reserves. That's the basic understanding that I have of why Silicon Valley Bank went under. Now, Silicon Valley Bank, yes, it went into bankruptcy, but they were bought out by another company. And the funds that were used to purchase that company were given to them through what they call the bank term financing program, BTFP, I believe it's called. And that's effectively a bailout. But no companies in the crypto space have ever been bailed out. When those companies fail, they're gone, they're dust. It's it. If there are scams and they're likely to get caught, then they got put in jail. Now, I'm not saying that it does not, the speed and freedom that cryptocurrency allows financial transactions to occur. I'm not saying that that shouldn't be regulated and fences should be put around everything so that it works better. What I am saying is that it's a really clear show of someone's intellectual understanding of the entire space to put it all in a bucket and then use it as a political football about rich versus poor or blue versus red. At the end of the day, Bitcoin itself is apolitical. It can be used by anybody for anybody to do anything. And that is both a curse and a blessing. It is up to you with your personal freedom to make the right choices. It is up to you with your personal freedom to secure your Bitcoin. It is up to you with your personal freedom to send your Bitcoin where you believe it will be safest. If you fall for a scam, that's on you. That is the piece that people don't understand, because we've gotten used to all the risk in our lives being given to other people. We pay for car insurance. So if we get into a car accident, the risk is on the insurance people. Home insurance is the same thing. Medical insurance. So instead of taking responsibility for ourselves, we know that we're going to be taken care of by somebody. We have money in banks. If the bank has an issue, the federal government will make them whole, make each one of us whole up to $250,000, depending on which account it's in. At the end of the day, what Bitcoin does is it says, be responsible for your own understanding of the world and the safekeeping of your own value. And I'm going to make it as easy as possible to hold on to that value. And that value cannot be taken from you because it's stored in something that's immutable. It's not the right path to go down after such a devastating result in a national election, to say to the people that spent the most money to get something done that everything they're doing is bad because they helped to elect more of the other team than my team, right? Imagine if the food company decided we're never going to invest in one party and we're going to invest in the other. Now all of a sudden, are we going to say Chipotle chicken is bad, Starbucks is bad, all of these things are bad. I can't support what value you bring to the world because of your political views. And the funny thing is none of these industries have political views. They just want the person in office that will help them get done what they want done. That's what the crypto industry did. It went to the party that was comfortable doing the thing they wanted to get done. That doesn't mean what they wanted to be done was evil. They were just politically expedient. They did what made sense. And I do believe that this was a huge reason why things were swung the way they did on the election. And without understanding of that, without even understanding the base problem, it's going to be a reoccurring issue. So don't fall for these rants about why Bitcoin's bad. Don't fall for these rants even about why cryptocurrency is bad. You need to do your own research. Don't listen to anybody else. Don't take what anybody else says for face value. Listen to as many sources as possible. Go do your own research, find actual sources of truth and information, and then come to your own understanding of it. But if you're just repeating what someone else is saying, you're most likely going to be the person that's going to look back 10 years from now and being like, damn, I can't believe I missed out on the burgeoning of the internet, right? I can't believe I missed out on smartphones. I can't believe I missed out on electricity. That's the scale and size of the technologies that are all coming together at once right now in today's day and age are as big as all of those technological eras that occurred in the past. Probably bigger, because it's like it's a lot of things coming together at once that are all exponential in their value creation ability. Blockchain technology, decentralized, trustless applications. That's really what blockchain underpins. AI, quantum computing, robotics, space exploration. All of those things are going to change the way humans walk through the world and create value. And if you're out here blaming one piece of technology because it helped the other team win in a game, you're going to get left behind. And you're not going to have a lot of power over money. Money going to have a lot of power over you. So with that, I'm going to call it a night. Hopefully this doesn't get taken down. If it does, I'm going to chop it up with some citations that don't elicit the digital rights issue. Thanks again for everything, and I'll see you guys on the flip side.